Archer Aviation stock has surged more than 200% in the past 12 months. But is the stock the real deal, or is it due to give back some of those impressive gains? There's a lot of promise with the stock, but it also comes with plenty of risk. In this video, I'm going to weigh both the positives and the negatives about it to see whether it's worth buying or if you're better off holding off. Let's start with what Archer does and why it's been so hot over the past year. Archer is a US-based aerospace company which makes electric vertical takeoff and landing aircraft, eVTOL for short. Its flagship aircraft is the Midnight. It's designed for short distance air taxi services, can carry up to 4 passengers and 1 pilot, and it isn't as noisy as a helicopter. The plan is for the company to commence commercial operations as early as this year. You've heard about the hype about self-driving robo-taxis on land, but Archer takes that to the next level with air taxis. And Archer has been partnering with some notable companies. Last year, it announced a contract manufacturing agreement with automaker Stellantis, which is going to help Archer as it scales its operations. United Airlines has placed a $1 billion order for 200 aircraft from Archer, plus an option to order 100 more for an additional $500 million. In total, the company's backlog right now is at around $6 billion in potential orders. Investors see this as a strong sign of demand and highlights just how promising the growth opportunity is for Archer. Recently, the company also announced a partnership with data analytics company Palantir Technologies, where the two will work together on AI and analytics, which can help Archer scale its business and work on efficiency. Given Palantir does a lot of business with governments around the world, including the US government, that partnership could potentially lead to other opportunities for Archer in the future. The big test might come in a few years, however, in 2028, during the Olympics in LA. Archer has been named the official air taxi provider for the Games. It will fly members of Team USA and other VIPs around. And if it can do a good job of transporting attendees around LA and helping them to avoid the city's horrendous traffic, that would certainly grab the attention of a lot of the public and would likely win over many investors. It's definitely a huge potential catalyst ahead to watch out for. But even well before that, this year actually, the company plans to launch its commercial operations in the Middle East, specifically in the United Arab Emirates. The first Midnight aircraft is on track to be delivered to Abu Dhabi this summer. Entry into the US is still to be determined as it's still working on obtaining FAA certification for its Midnight aircraft. Archer and United are hoping to launch an air taxi network in New York, where they say instead of 1 to 2 hour travel, people can replace that with flights of just 5 to 15 minutes. However, I'm a bit wary of this idea as New York is already a very busy area for air travel, and air traffic controllers are already struggling to keep up as it is. Adding air taxis into the mix only exacerbates those issues. That's the hope and the plan, but whether it will become reality is debatable. In the meantime, Archer is working on scaling its operations, and if things go according to plan, its hope is to be producing 650 aircraft annually by the end of the decade. By the end of this year, its goal is to be producing at least 2 per month, so it still has a long way to go. Now, the obvious risk here is that the business is in its very early growth stages. It's an unproven company. While the growth prospects sound incredible, this is a business that's not going to be generating much revenue for a long time. The name of the game at this stage is to keep the cash burn as low as possible before revenue starts coming in. In its most recent quarter, the company's operating loss was $144 million. Most of that was due to research and development costs. In terms of cash, it used up just under $95 million over the course of its day-to-day operations and another $10 million in capital expenditures. Stock offerings may be necessary to help keep it afloat if it needs more money to scale its operations. And that's not great news for investors because as more stock hits the open market, that will put downward pressure on the share price. But the good news is that the company has more than $1 billion in cash and cash equivalents on its books, so it's well funded for a while. If we assume it continues to burn through about $100 million per quarter, then that cash balance might last it 10 quarters, or about 2.5 years. But odds are its cash flow is likely to intensify significantly, especially as it ramps up production of its aircraft. However, Stellantis is going to be helping with its manufacturing costs. Right now, the situation looks okay, and a stock issue may not be on the horizon anytime soon. But I think as it starts to really start producing a lot of aircraft, and as it gets closer to its goal, that can change. As for valuation, today the stock is worth about $6 billion in market cap. Some people point to that being in line with its backlog and thinking it's a good deal, but I wouldn't go that far. Its valuation is a bit rich for a company at such an early stage in its growth. Take for instance that according to analysts, the entire air taxi market was worth just 2.3 billion in 2023, and it won't be until 2032 when it might top 14 billion. That's 7 years away, and Archer is already fairly big in value in comparison. There's definitely a lot of potential with air taxis, but these aren't high capacity aircraft. The infrastructure needs to be built, and there are a lot of things that have to go Archer's way for this to be a big business in the future and a profitable one. This is a capital intensive business, and it may not be easy to turn a profit, even as it ramps up production. It's extremely early to be getting in on this stock right now. Personally, I wouldn't buy it just because its valuation is high enough where success is effectively priced in. The stock could have a long way to fall if its growth prospects don't materialize or if it stumbles down the road. If you invest in the company, be prepared to be extremely patient, as it can take a while before it proves to be the real deal, because at this stage, Archer is nowhere near proving it has a sustainable and investable business. So, what do you think about the stock? Are you buying it? Let me know in the comments. And if you found this video useful and helpful, please make sure to leave a like and subscribe for more. Thanks for watching.